February 25th. That is the date every CPP and OAS recipient in Canada needs to know right now. Your next deposit is coming, and this year it carries something important, a confirmed 2.0% benefit increase that has already changed your monthly amount. The question is, do you know exactly what you should be seeing in your account? My name is Joseph, and welcome to Canada Pension Guide, the channel dedicated to breaking down Canada's pension system in plain, honest language so that you always know exactly where you stand. Today we are talking about February 25th, 2026, the official payment date for both CPP and OAS. We are going over what the 2.0% increase actually means in your pocket, who gets it, how to confirm it, and a few things you need to check before that deposit hits. And if you stay until the end, I am going to walk you through 3 simple steps that will take you less than 10 minutes and give you complete clarity over your file. Now, before we get into the numbers, I want to flag something that many retirees often overlook. It has to do with the OAS clawback, officially called the OAS recovery tax, and a revised income threshold for 2026 that is slightly higher than last year. If your income sits anywhere near that line, the 2.0% increase could interact with your tax return in a way that surprises you come filing season. We are going to explain exactly how that works, and I promise by the end of this video it will make complete sense. There is also something important about the T4A slip that Service Canada has already issued or will issue you shortly. One specific figure on that slip directly affects how your GIS eligibility is calculated for the rest of 2026. Most people glance at that slip and file it away. We are going to tell you what to actually look for. But let us start at the beginning and build this out clearly. Canada Pension Plan and Old Age Security are 2 separate federal programs, and the 2.0% increase applies to both, but it works differently for each one. CPP is based on your lifetime contribution history. The more you contributed during your working years, and the longer you contributed, the higher your base benefit. The 2.0% annual indexation for 2026 is applied directly to your existing CPP amount. It is not a bonus. It is not a one-time payment. It is a permanent upward reset of your monthly baseline, and it took effect with your January 28th deposit. Your February 25th payment should reflect that same adjusted amount. Here's a simple way to think about it. If you were receiving $1,000 per month in CPP at the end of 2025, you should now be receiving approximately $1,020 per month throughout 2026. If you were receiving $800, your new amount should be approximately $816. If you were receiving $2,300, look for something close to $1,926. The percentage is the same for everyone. The dollar difference depends on your individual base amount. OAS works differently. Old Age Security is not contribution-based the same way CPP is. It is a universal benefit available to Canadians who are 65 or older and meet Canadian residency requirements. You need to have lived in Canada for at least 40 years after age 18 to receive the full OAS pension. Fewer years of residency means a partial pension, calculated proportionally. For 2026, the estimated maximum OAS for recipients aged 65 to 74 is approximately $742 per month. For those aged 75 and over, you receive a permanent 10% enhancement on top of that, putting the estimated maximum at approximately $816 per month. These amounts reflect the ongoing quarterly CPI adjustments that OAS follows throughout the year. And here is something that makes February 2026 especially significant for many Canadian seniors. Both CPP and OAS are scheduled on the exact same date, February 25th. That means if you receive both programs, you will see 2 separate deposits hit your account on the same day. Some banks may show these as a single combined amount. Some may show them separately. Either way, it is worth knowing what each one should be so you can verify both are correct. Now let us talk about the OAS recovery tax, because this is the detail I want to make sure you understand before tax season arrives. The OAS clawback applies when your net world income exceeds a certain threshold. For 2026, that threshold sits at $95,323. If your income for the year exceeds that figure, the CRA begins recovering a portion of your OAS benefit. The recovery is 15 cents for every dollar of income above the threshold. The upper limit, the point at which your OAS could be fully recovered, is $154,708 for those aged 65 to 74 and $160,747 for those aged 75 and over. These thresholds are higher than last year, which is good news. More retirees will fall below the clawback line in 2026. But if you have other income sources, RRIF withdrawals, rental income, investment income, or proceeds from a one-time asset sale in 2024, your net income may be closer to that line than you expect. This is worth reviewing before you file your 2024 tax return this spring. A tax professional or the CRA. My Account portal can help you model this out quickly. Most OAS recipients are nowhere near the clawback threshold, but for those who are, a 10-minute income review is worth every second of your time. Now, the GIS Guaranteed Income Supplement. This benefit is available to low-income OAS recipients, and it is income tested every single year. The amount you receive in GIS for 2026 is calculated based on your 2024 net income. That is where your T4A slip becomes critical. Service Canada issues a T4A slip to every CPP and OAS recipient each year. It shows the total pension income you received in the previous calendar year. When you file your taxes, this slip is part of how the CRA determines your income, and in turn, how Service Canada determines your GIS eligibility and amount for the coming period. Here is the thing most people miss. If your 2024 income was unusually high because of a one-time RRSP withdrawal, the sale of a property, or any other non-recurring event, your GIS may have been reduced or paused in 2025. But if your income in 2025 and going forward has returned to its normal lower level, you may be eligible to request a GIS reassessment based on your current year income rather than your prior year income. This is a legitimate option offered by Service Canada, and it is genuinely underused. I will be doing a full dedicated video on this process soon, so make sure you are subscribed so that video finds you when it goes live. Right now, I want to pause and hear from you directly, because this community spans every province and territory in this country, and your experience matters. I'd like to hear from you. Which province are you watching from right now? And has the 2.0% increase actually kept pace with what you are spending on groceries, housing, and healthcare in your day-to-day life? Drop your province and your honest take in the comments below. Just write your province and tell us, does this increase feel like enough, or does it feel like it is falling short? Your voice helps other retirees across the country understand what retirement income really looks like in different regions, and it helps me build better content for you every single week. Now let us get into your 3 action steps. These are simple, and doing all 3 this week puts you in a position of complete confidence before February 25th arrives. Step 1. Log in to your My Service Canada account and confirm your current benefit amount for both CPP and OAS. Compare your January 28th deposit to what you were receiving in December 2025. The difference should reflect the 2.0% increase. If the numbers look right, you are in good shape. If something looks off, if the amounts did not change, or if they changed by more or less than expected, that is worth a call to Service Canada to clarify. While you are logged in, confirm that your direct deposit banking information is current. If your bank account has changed and you have not updated it, your February 25th payment could be delayed or sent to the wrong account. Step 2. Locate your T4A slip. It should have arrived by mail, or you can access it digitally through your CRA My Account under the Tax Information Slip section. Review the total pension income reported on that slip. If you receive GIS, pay close attention to whether your reported 2024 income was higher than usual. If it was, consider whether a reassessment request might benefit you. Keep the slip accessible. You will need it when you file your 2024 tax return. Step 3. Confirm your mailing address is consistent across both Service Canada and the CRA. A mismatch between the two can cause delays in benefit notices, tax slips, and adjustment letters. If you rely on paper correspondence rather than digital accounts, this step is especially important. You can update your address through My Service Canada account, through CRA My Account, or by calling the respective phone lines directly. It takes about 5 minutes and prevents a significant amount of unnecessary delay. That is it. Check your amounts, review your T4A, confirm your address. 3 steps, less than 10 minutes, and you have done your due diligence for the month. Here is how I want to leave you today. The Canadian pension system is genuinely complex. The way CPP indexation interacts with OAS quarterly adjustments, the way GIS eligibility flows from your tax return, the way the clawback threshold shifts year over year, none of this is designed to be intuitive. And that complexity is not a reflection of anything you did or did not do. It is simply the system as it exists. But here is what is true right now. You know February 25th is your payment date. You know the increase is 2.0%. You know where to verify your amount. You know what to look for on your T4A. And you know your clawback threshold for 2026. That is a meaningful amount of clarity, and you should feel good about having it. You are not navigating this alone. That is the entire reason this channel exists, to be the steady, clear voice in a space that often feels unnecessarily complicated. If this video gave you something useful today, please give it a thumbs up. It helps more Canadian retirees find this information when they need it most. And if you are not yet part of the Canada Pension Guide community, hit that subscribe button right now. Every week we break down exactly this kind of information calmly, clearly, and always with your financial security as the only priority. This is Joseph. Thank you for being here. Stay informed, stay steady, and I will see you in the next one.